Assalamualaikum and good morning everyone. Today we're going to present Financial Accounting and Reporting 4 video presentation. Together with me, our team members from Group 3, which is Syed, Haikal, Tasnim and Umar. Our team members. Let's start with Part A, MFRS134, Interim Financial Reporting.
So let's start with question 1, definition of MFRS 134. So MFRS 134 refer to preparation and presentation of financial report for periods shorter than full financial years, such as quarterly or half-year report. The main objective is to provide timely, relevant financial information to users. Under this standard, company must include the minimum component of interim financial report. This can be presented either as a complete set of financial statement or in condensed form. The report includes the statement of financial report, statement of profit or loss, and other comprehensive income. Also, statement of change in equity, cash flow statement, and selected explanatory notes. MFRS 134 also set out principles for recognition and measurement. Interim periods are treated as a part of the annual reporting cycle. Companies often need to estimate when preparing this report. The purpose of MFRS 134 is to help investors and users monitor company performance through the year, improve transparency, and support better decision making. It also helps users evaluate the company financial position, performance, liquidity, and ability to generate profit and cash flow, while ensuring consistency and comparability between interim and annual report. This is an example for interim report for years 2034. Next, I will explain question 2, the significant event and transaction that cause change for the financial reporting. The first transaction is acquisition for 49% stake in KKB Supply Chain Sdn Bhd. On 21 May 2034, Mr. Dakwai subscribed 8.6 million new ordinary share in KKB for total cash payment 9.6 million. This gave the company 49% ownership in KKB, which is a wholesale lifestyle retailer. As a result of this transaction, the group investment in associated increased from 3 million at the end 2033 to 60 million at the end of 2034. In addition, the investment generate of share profit amounting 1.9 million, which contribute to the group overall profit. The investment improved Mr. DIY financial position by adding valuable new asset and increasing profit. It also allow the company to reach younger customers without need to build new store. The second succession is Mr. DIY in 2034, opening 174 new stores across Malaysia. This expansion requires significant cash spending 146 million on PPE. At the same time, ROU, which represents store list, increased 1.3 billion. Because of the increase of number of stores, the customer transaction grew by 10%, reaching more than 182 million transactions. This led to increase in revenue by 6.7%, reaching 4.6 billion. Overall, the store expansion strengthened Mr. DIY financial performance by increased sales and customer activity. Although it requires high initial cost, the long-term benefit is stronger main presence and higher revenue.
Next, we're going to question 3, Current and Comparative Interim Financial Statements, MFRS 134. Today, we are looking at the interim financial performance of Mr. DIY Group Berhad, a household name and Malaysia's largest home improvement retailer. To get a full picture of Mr. DIY, we have analyzed the 4 primary financial statements included in the report, which is Statement of Profit or Loss, Statement of Financial Position, Statement of Changes in Equity, and Statement of Cash Flow. Moving to our third slide, it is important to understand the reporting periods used for comparison. In accounting, we don't just look at numbers in isolation. We compare them to previous periods to identify the trends. For the statement of financial position, we compare the current status as of 30 September 2025 against the comparative audited year end, which was 31st December 2024. This shows how the company's wealth has grown since the start of the year. For the profit or loss, changes in equity and cash flow statement, the comparison is period on period. We compare the performance from 1st January to 30 September 2025 against the same 9-month window in 2024. This ensures we are accounting for seasonal trends in retail. Finally, let's look at the key highlights. Mr. DIY continues to show resilience. Comparing the 2025 third quarter data to 2024, we see a revenue growth of 5.58%, rising from approximately RM 1.13 billion ringgit to nearly 1.2 billion ringgit. This growth is a strong indicator of their successful store expansion strategy and stable consumer demand. While net profit and gross margin show some slight fluctuation due to operational costs, the steady climb in revenue confirms that Mr. DIY remains a dominant force in Malaysian market.
So let's move to part B, operating segment. Question 1. Definition of MFRS 8. The definition of MFRS 8. MFRS 8 is an operating segment which is a component of an entity that engages in business activities from which it may earn revenues and incur expense, including revenues and expense relating to transactions with other components of the same entity. Why is it important? Because operating results are regularly reviewed by the entity's chief operating decision maker (CODM) to make decision about resource to be allocated to the segment. It is to assess its performance and for which discrete financial information is available. This is segmental report for Mr. DIY for the year 2024. Next, question 2 about shift of decision making and example for CODM. Okay, so what is shift of decision making or CODM? CODM is in charge of reviewing management segment results and reports and assessing the performance of the various segments of an entity and also deciding on the allocation of resources to the various segment of the entity. It also refers to the person or group responsible. For example, like individual CEO and a group board of directors. So my group, for example, my group choose company Mr. DIY Group and Berhad. The person in charge as CODM is Chief Executive Officer or CEO. Mr. DIY operates mainly as a retail business. So the CEO reviews financial performance such as sales, margins and stock expansion and also make decision on resources allocation. If, for example, number 2 is we choose company Ecosave, which is popular among people in Malaysia. So the CODM in Ecosave is likely board of directors or senior management team. They are responsible of reviewing the performance of supermarket operation and making decisions on resources allocation such as store expansion and pricing strategies. Question 3. Two types of segmental report used in financial reporting. There are two types of segmental report used in financial reporting for Mr. DIY. The first one is business segment. The second one is geographical segment. For the last question of MFRS 8 about benefit segmental reporting to financial statement users. Okay, so for answer question number 4, before enter the benefit, referring to the snippet of Mr. DIY Group and Berhad, we can see that the company reports its operation by geographical segment. It's shown in Malaysia, the revenue is 4.9 billion ringgit, but at Brunei only 14 million ringgit. So we go to the first segmental benefit report, which is allow users to evaluate performance across different segments of the business. Based on the snippet, it is clear that Malaysia contributes almost all of the company and profit. This helps users understand that the company financial performance is heavily dependent on the Malaysian market and it highlights the potential concentration risk. Okay, for the second benefit of segmental reporting is improved decision making and forecasting. From the snippet, users can compare the scale of the operation between Malaysia and Brunei, which reflect different economic environments. Malaysia appears to be a mature and dominant market, while Brunei represents a smaller and growing segment. This information helps investors to assess future expansion opportunities and evaluate whether the company is diversifying its operation effectively.